Let me ask you something. If you bought silver in 2025, do you know what just happened? Because what I'm about to show you changes everything. And I mean everything. See, most people who bought silver last year think they made a decent investment. Maybe you're up 15%, maybe 20%. You're feeling pretty good about it. But here's what nobody's telling you. You're sitting on something that's about to explode in a way that hasn't happened in over 40 years. And if you don't understand what's happening right now, in the next 72 hours, you could miss the biggest wealth transfer opportunity of your lifetime. I'm going to show you exactly what's unfolding. The data I'm about to share with you isn't speculation. It's not theory. It's happening right now. And the institutions know it. The central banks know it. The billionaires know it. And they're positioning themselves accordingly while retail investors are completely in the dark. Let me start with something that should terrify you. In 2025, global silver demand hit 1.2 billion ounces. That's billion with a B. Now here's the problem. Total mine production? 830 million ounces. Do the math. We're short 370 million ounces. That's a 44% supply deficit. The largest deficit in recorded history. But it gets worse. Much worse. You see, silver isn't like gold. Gold sits in vaults. It gets hoarded. It's a store of value. Silver gets consumed. It gets used up in solar panels, in electronics, in electric vehicles, in medical applications. Once it's gone, it's gone. And right now, we're consuming silver faster than we can pull it out of the ground. Let me paint you a picture of what's really happening. In 2010, there were about 1 billion ounces of silver in above-ground inventories, investment-grade silver that could actually come to market. Today, we're down to about 2.5 billion ounces. Sounds like a lot, right? Wrong. At current consumption rates, that's less than 3 years of supply. 3 years. Now, I want you to think about something. What happens when you have 3 years of supply left of a metal that's absolutely critical to the green energy transition, to electric vehicles, to solar panels, to 5G technology, to medical devices? What happens when every major economy on Earth is racing to electrify everything? I'll tell you what happens. The price doesn't just go up, it explodes. But here's where it gets really interesting. Let me tell you about what happened in March 2024. You probably didn't hear about this because the mainstream media barely covered it. The COMEX, that's the major commodities exchange in New York where silver futures are traded, they had a problem. A big problem. There was a delivery squeeze. Traders who had sold silver futures, promising to deliver physical silver, couldn't find enough metal to fulfill their contracts. The COMEX had to change their rules. They had to allow delivery from London vaults to satisfy New York contracts. That had never happened before. Never. Think about what that means. The paper silver market, where billions of dollars trade every single day, couldn't find enough physical silver to back up their promises. And this wasn't some small squeeze. This was the COMEX, the most important silver market in the world, essentially admitting they don't have enough metal. Now, let me show you what the smart money is doing. In 2024, silver ETF holdings increased by 185 million ounces. That's the largest annual increase since 2020. But here's the kicker. Most of that buying happened in the last 4 months of the year. Institutional money is flooding into silver at a pace we haven't seen in years. And it's not just ETFs. Let me tell you about what happened with the U.S. Mint. In 2024, they sold 38.5 million American Silver Eagles. That's up 35% from 2023. But here's what's crazy. In December alone, they sold 4.2 million coins. In 1 month, they literally couldn't keep up with demand. There were delays. Premiums spiked. Dealers were scrambling to find inventory. This is retail panic buying. And it's just getting started. Now, I want to take you back in history for a moment, because what's happening right now rhymes with something that happened before. In 1979, silver was trading around $6 an ounce. By January 1980, it hit $50. That's a 733% increase in less than a year. Now, I'm not saying that's going to happen again, but I am saying the setup is eerily similar. Back then, you had the Hunt brothers trying to corner the silver market. Today, you don't need the Hunt brothers. You have something much bigger. You have every major economy on Earth committed to net zero carbon emissions. You have China, the the United States, Europe, all racing to build out solar infrastructure. And every single solar panel requires about 20 grams of silver. Let me put that in perspective. In 2024, solar panel production consumed 185 million ounces of silver. By 2030, that number is projected to hit 320 million ounces. That's just solar. That doesn't include electric vehicles, which use about 25 to 50 grams of silver per vehicle. That doesn't include 5G infrastructure. That doesn't include medical applications. The industrial demand for silver is about to go parabolic, and there's no way to replace it. They've tried. They've looked at copper, at aluminum, at other alternatives. Nothing works as well as silver. It's the most conductive metal on Earth. It's the most reflective. It has unique antibacterial properties. You can't just substitute something else. So here's where we are. You have surging industrial demand. You have a massive supply deficit. You have institutional buying accelerating. You have retail panic buying starting. And you have a paper market that's showing cracks. But wait, there's more. Let me tell you about what's happening in China. In 2024, China imported 7,200 tons of silver. That's up 47% from 2023. 7,200 tons. That's 231 million ounces. China is vacuuming up physical silver at a rate that's absolutely stunning. And it's not just China. India imported 4,800 tons. That's up 28%. Mexico, the world's largest silver producer, their exports dropped 12% because domestic demand is soaring. The physical silver is disappearing into strong hands, into industrial users who need it, into countries that are stockpiling it. Now here's something most people don't understand. The silver market is tiny. The entire annual silver market is worth about $30 billion, that's it. For comparison, Apple's market cap is over $3 trillion. The entire silver market is 1% of one company. It's a rounding error in the global financial system. What happens when institutional money really starts flowing into silver? What happens when pension funds, when sovereign wealth funds, when billionaires decide they need exposure to this metal? The market is so small that even a tiny percentage of global capital flowing in would send prices to levels that seem impossible right now. Let me give you a specific example. In 2020, when the Reddit crowd targeted silver, when Wall Street silver started their movement, silver went from $8 to $30 in a matter of weeks. That was retail buyers, mostly in the United States, buying coins and small bars. That was maybe a few $1 billion of buying pressure. And it moved the market 67%. Now imagine what happens when real money comes in. When you have sovereign wealth funds with trillions under management deciding they need hard assets. When you have pension funds looking at the inflation numbers and realizing they need real money, not paper promises. The leverage in this market is insane, and most people have no idea. Now let me talk about something that's happening right now that should concern you, the gold to silver ratio. This is how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged around 60 to 1. Sometimes it goes to 40 to 1. Sometimes it goes to 80 to 1. In 2024, the ratio averaged around 85 to 1. Right now, as I'm recording this, it's sitting at about 88 to 1. That means silver is historically cheap relative to gold, extremely cheap. And here's what history tells us. When this ratio gets stretched this far, it snaps back, hard. In 2011, when silver hit $49, the ratio was 31 to 1. In 2020, when silver rallied to $30, the ratio compressed from 125 to 1 down to 70 to 1. Every single time this ratio gets extended, silver outperforms gold on the reversion. And right now, we're at one of the most extended levels in history. If silver just reverts to the historical average of 60 to 1 and gold stays where it is around 2,750, that puts silver at $44. That's a 70% gain from current levels. And that's just mean reversion. That's not even accounting for the supply deficit, the industrial demand surge, the institutional buying. Let me tell you about what happened in November 2024. There was a conference in London, the LBMA conference. That's the London Bullion Market Association. All the big players in the precious metals world were there. The banks, the refiners, the miners, the traders. And behind closed doors, there was panic. Not public panic. Quiet, professional panic. because everyone in that room knows what's coming. They know the supply situation. They know the demand projections. They know the inventories are draining. And they know that when the market finally wakes up to this reality, it's going to be chaos. One senior trader told me off the record that they're seeing things in the physical market they've never seen before. Tightness, delays, premiums that don't make sense. He said, and I quote, "The paper market is living on borrowed time. When the disconnect becomes obvious, it's going to be biblical." Now, I want to talk about something that most people don't think about, the mining situation. In 2024, the top 10 silver mining companies produced about 320 million ounces. That's less than a third of global demand. And here's the problem. Silver grades are declining. It's getting harder and more expensive to pull silver out of the ground. The average silver mine grade in 2000 was about 12 ounces per ton. Today, it's closer to 6 ounces per ton. That means you have to move twice as much rock to get the same amount of silver. Costs are going up. Production is getting harder. And there aren't enough new projects in the pipeline to make up for depleting reserves. Let me give you a specific example. The Cannington mine in Australia, one of the world's largest silver mines, is depleting. Production has been declining for years. The Fresnillo mine in Mexico, another major producer, same story. These giant mines that have supplied the world with silver for decades are running out, and it takes 10 to 15 years to bring a new mine online. From discovery to production, you're looking at over a decade. Even if silver prices double tomorrow, even if miners have every incentive to find new deposits, the supply can't respond quickly enough to meet the demand that's coming. This is a supply crisis in slow motion, and it's accelerating. Now, let me talk about something that's going to sound crazy, but I need you to hear me out. There's a theory in the silver market that the price has been suppressed for decades, that the big banks, the ones who trade silver futures, have been keeping the price artificially low through paper manipulation. I'm not going to get into conspiracy theories, but I will tell you this. In 2012, Deutsche Bank settled a silver manipulation lawsuit. In 2016, the U.S. Commodity Futures Trading Commission fined several banks for spoofing in the precious metals markets. In 2020, J.P. Morgan paid $920 million in fines for manipulating the gold and silver markets. These aren't theories. These are facts. These are settlements. These are admissions. Now, whether the price has been suppressed or not, here's what matters. The physical market is tightening. The inventories are draining. And at some point, the paper market has to reconcile with physical reality. When that happens, when the disconnect becomes too obvious to ignore, the price adjustment is going to be violent. Think about what happened with nickel in 2022. The London Metal Exchange had to halt trading because the price went parabolic. Traders who were short couldn't deliver. The exchange had to cancel trades. It was chaos. And that was nickel, a market much larger than silver. What happens when the silver market breaks? When the COMEX can't deliver? When the paper promises can't be fulfilled? I'll tell you what happens. The price goes to wherever it needs to go to find physical metal. And that number could be shockingly high. Now let me bring this back to you. If you bought silver in 2024, you made a smart move. But here's what you need to understand. This isn't over. This is just beginning. The move we saw in 2024, silver going from $23 to $32, that was just the warm-up. That was the market starting to wake up to the supply situation. The real move, the move that's going to shock people, that's still ahead. And it's going to happen faster than most people think. Let me tell you what I'm seeing right now. Premiums on physical silver are rising. When you go to buy a silver eagle or a silver maple leaf, you're paying $4 to $6 over spot price. That's high. That tells you there's strong demand for physical metal. Dealers are struggling to keep inventory. Mints are running at full capacity and still can't keep up. This is what the early stages of a shortage look like. This is what happens before the price really takes off. Now, I want to talk about something important. If you're sitting on retirement accounts, if you have $100,000 or more in IRAs or 401ks, you need to understand something. There's a way to get physical precious metals into those accounts without tax penalties. It's called a gold IRA, but you can hold silver in them too. I put together a free guide that explains exactly how this works. It's in the description below. It covers the rules, the process, the custodians you need to work with. If you're concerned about inflation, if you're worried about the dollar, if you want real assets in your retirement account, it's worth checking out. No obligation, just information. All right, back to what's happening in the market. Let me tell you about what's happening with industrial users. In 2024, I spoke with a procurement manager at a major electronics company. He told me they're now buying silver 18 months in advance. They used to buy 3 months out. Now it's 18 months. Why? Because they're terrified of not being able to get the metal they need. This is a company that uses millions of ounces a year, and they're so concerned about supply that they're tying up capital a year and a half in advance just to secure their needs. That's not normal. That's panic, and they're not alone. Solar panel manufacturers are doing the same thing. Electric vehicle companies are locking in supply contracts. Everyone who needs silver is scrambling to secure it, and every ounce they lock up is one less ounce available for the market. This is how shortages develop. Slowly, then suddenly. The market looks fine until it doesn't, and then it's too late. Now, let me talk about what's happening with central banks. In 2024, central banks bought 1,037 tons of gold. That's the second highest year on record. They're diversifying away from dollars, away from euros, into hard assets. And while they're focused on gold, the smart money is looking at silver. Because here's the thing, gold is expensive. It's $2,650 an ounce. For a central bank or a sovereign wealth fund to build a meaningful position, they need billions of dollars. Silver is $30 an ounce. It's accessible, and the upside potential is much larger. I'm not saying central banks are going to start buying silver tomorrow, but I am saying that when institutions start looking at the precious metals space, when they start doing the math on supply and demand, silver is going to look very attractive. And when that money starts flowing in, the market is going to move in ways that seem impossible right now. Let me give you another historical parallel. In 2008, during the financial crisis, silver dropped to $9 an ounce. By 2011, it was at $49. That's a 444% gain in less than 3 years. What drove that? Fear, uncertainty, people losing faith in the financial system and moving into hard assets. Now look at where we are today. We have inflation running hot. We have geopolitical tensions escalating. We have de-dollarization accelerating. We have BRICS countries talking about gold-backed currencies. We have trust in institutions at all-time lows. The setup for precious metals is better now than it was in 2008, and silver, because of the supply situation, because of the industrial demand, has more leverage than gold. Let me tell you about what happened in December 2024. There was a moment when silver briefly touched $34 an ounce. It was a spike, it came back down, but that spike told you something. It told you that the market is coiled, that there's energy building, that when the next catalyst hits, the move is going to be explosive. What's the catalyst going to be? I don't know. Maybe it's a geopolitical event. Maybe it's a major mine closure. Maybe it's a sovereign wealth fund announcing a silver position. Maybe it's the COMEX having another delivery problem that they can't paper over. But the catalyst is coming. The fundamentals guarantee it. You can't have a 44% supply deficit and not have a price response. You can't have inventories draining at this rate and not have a shortage. You can't have industrial demand surging and supply declining and not have a crisis. The math doesn't work, and the market is going to figure that out. Now let me talk about what you should be thinking about if you own silver. First, understand that volatility is coming. Silver is going to swing. It's going to have big up days and big down days. That's the nature of this market. Don't let the volatility shake you out. Second, think about your time horizon. If you bought silver as a short-term trade, you might get lucky. But the real money is going to be made by people who hold through the volatility, who understand the long-term thesis, who recognize that this is a multi-year story. Third, consider your position size. If you're underweight silver relative to the opportunity, if you only have a small position, you might want to think about adding. Not financial advice, but the risk-reward here is extremely compelling. And fourth, pay attention to the physical market. Watch the premiums. Watch the inventory levels at the COMEX and the LBMA. Watch what the mints are doing. The paper price might not reflect reality, but the physical market always tells the truth. Let me tell you about something that happened in 1980 that most people don't know. When silver hit $50, there were stories of people melting down their silverware, their jewelry, anything silver they could find to sell into the market. The high price brought out supply from everywhere. That's not going to happen this time. Why? Because most of that silver is already gone. It was melted down in the 80s and 90s when prices were low. The silverware, the jewelry, the coins, most of it's been recycled already. There isn't a hidden supply waiting to come to market. And even if there was, even if every piece of silver jewelry in the world was melted down tomorrow, it wouldn't be enough to satisfy industrial demand. The solar panels need silver. The electric vehicles need silver. The 5G infrastructure needs silver. And they need it continuously, year after year. This isn't a speculative bubble that can be popped by bringing out supply. This is a structural deficit that's going to persist for years. Now let me talk about what's happening in the derivatives market. The open interest in silver futures is enormous. There are hundreds of millions of ounces of paper silver trading every day, and most of it is never intended to be delivered. It's just speculation, just trading. But here's the problem. When the physical market tightens, when the inventories get low enough, some of those paper traders are going to want delivery. And when they do, when they stand for delivery and demand physical metal, the system is going to be tested. We saw a preview of this in March 2024. We're going to see it again. And next time it might not be so easy to paper over. Let me tell you about a conversation I had with a bullion dealer in November 2024. He's been in the business for 30 years. He told me he's never seen demand like this. Not in 2008, not in 2011, not in 2020. He said people are buying everything. Silver eagles, silver maples, bars, rounds, junk silver, everything. And it's not just retail. He's seeing institutional buyers, family offices, high net worth individuals building positions. People who have never bought silver before are suddenly interested. The awareness is spreading. This is how bull markets start. Slowly, with the smart money accumulating quietly. Then the momentum builds. Then the crowd shows up. And by the time the mainstream media is talking about it, by the time your neighbor is asking you about silver, the big move is already over. If you bought silver in 2024, you're early. You're ahead of the curve. But you need to understand what you're holding. You're not holding a speculation. You're holding a metal that the world desperately needs and can't produce enough of. You're holding real money in a world drowning in paper promises. Let me give you one more piece of data. In 2024, the U.S. Geological Survey updated their estimates of global silver reserves. They put the number at 560,000 tons. That sounds like a lot, but at current consumption rates, that's about 20 years of supply. 20 years. And that's assuming we can extract all of it, which we can't. That's assuming grades don't continue to decline, which they will. That's assuming demand doesn't accelerate, which it absolutely will. We're running out of silver, not in some distant future, in our lifetime. And the market hasn't priced that in yet. Now, I want to talk about what happens when the market does price it in. When investors, when institutions, when governments realize that silver is a finite resource that's being consumed at an unsustainable rate. When they realize that the supply deficit isn't temporary, it's structural. The repricing is going to be brutal. Not brutal for people who own silver. Brutal for people who don't. Because the price is going to go to wherever it needs to go to ration the available supply. And that number could be multiples of where we are today. I'm not going to give you a price target. I'm not going to tell you silver is going to $100 or $200 or $500. I don't know where it's going. But I do know that the fundamentals have never been this compelling. I do know that the supply situation has never been this tight. And I do know that when markets break, they move faster and further than anyone expects. If you bought silver in 2024, you made a decision that's going to look very smart in hindsight. But don't get complacent. Don't assume the hard part is over. The volatility is coming. The big moves are coming. And you need to be mentally prepared for what's ahead. This is a once-in-a-generation opportunity. The kind of setup that comes along maybe once or twice in a lifetime. The kind of setup where the fundamentals are so overwhelmingly bullish that the only question is how high the price goes, not if it goes higher. Stay informed. Watch the data. Pay attention to the physical market and understand that what you're holding isn't just a metal. It's a bet on reality, a bet that physical assets matter, a bet that supply and demand still work, a bet that math eventually wins. And in this case, the math is screaming one thing: silver is going higher, much higher. The only question is whether you're positioned for it.